In today's video, I'm going to be sharing with you all the different real estate investment strategies and how you can pick the one that works best for you. What's going on, everybody? My name is Bailey Kramer, and welcome back to my channel where we talk all things real estate investing. When I was first starting out in real estate and deciding which path I wanted to take, I was overwhelmed by all the options. Do I want to be a wholesaler? Do I want to be a fix and flipper? Or do I want to be a buy and hold investor? I'm going to be breaking down all the different investment strategies so you can see what's best for you. Before we jump in, do me a favor and smash that subscribe button. No, like actually do it. Okay, thanks. So there's one main question you should be asking yourself once you decide that you want to invest in real estate, and it's why. Why do you want to invest in real estate? Your why, or the reason you want to invest in real estate, is going to be the number one factor in helping you decide which strategy is going to be best for you. Maybe you want to invest in real estate because you have a W-2 job, you're super busy, but you want to diversify your portfolio. Or maybe you want to invest in real estate because you don't have any money right now and you see real estate as a strategy to build capital. Everyone's why is different, and there's really no right or wrong answer. It's all about personal preference. Okay, so once you have your why in mind, you're going to pick whether you want to be an active investor or a passive investor. An active investor is someone who's responsible for finding the deal, managing the deal, and operating the deal. Now, let me be clear. You don't need to be a full-time investor in order to be an active investor. Maybe you decide to buy a rental and you hire a property manager to handle everything. In that case, your time commitment would be next to nothing, but you'd still have the responsibility of making decisions, like whether to refinance or sell the property. Or maybe you need a new roof and you have to make that tough decision. Do you do it now or next year? If you want to be more hands-on and have more control, active investing would be the best strategy for you. The other option is to be a passive investor. A passive investor is someone whose only responsibility is to bring money to the deal. They aren't responsible for finding the deal, managing the deal, or operating the deal on a day-to-day basis. The only real role of a passive investor is to check their mailbox or their bank account to see if they've gotten a distribution check. In order to be a passive investor, you need to have a relationship with an active investor like me, someone who has access to the deals so you have opportunities to invest. Okay, so which one do you see yourself as? Do you see yourself as the active investor calling the shots on the deal, or more of the passive investor just sitting back and collecting the distribution checks? Now I'm going to be sharing the different options for those who chose the active investor route, and for those who chose the passive investor route. I'll be covering that later in this video. Now it's time for you to decide which strategy you want to choose. There's really three main options for active investors. There's wholesaling, there's fixing and flipping, and there's buy and hold. I'll go through each of the three strategies, giving my unbiased opinion of the pros and cons for each, so you can see what fits best for you. All right, first up, we have wholesaling. Wholesaling is a real estate strategy where you get a property under contract to buy it, and instead of actually going through with the transaction, you sell that contract to another investor. This is also known as assigning a contract. And here's how you make money. Let's say you have a contract to buy a property for $90,000, but you know you got a really good deal on the property, and you know that another investor would actually be willing to pay $100,000 for the property. You could then assign that contract to this new investor, and if he buys it for $100,000 and you had it under contract for $90,000, you'll make $10,000. Now, the pros to wholesaling are you don't need much money to start, you don't need much experience, and you can build capital fairly quickly. The downside of wholesaling is you don't actually own real estate. You're just essentially flipping contracts. The income is also pretty inconsistent since you only make money when you close a deal, and it could actually take a really long time for you to find a good deal. I actually made a video explaining the different strategies for finding deals. So if you want to check out that video, I'll put a link to it in the description below. All right, strategy number 2 is fix and flip. As the name suggests, it's a strategy where you fix a property up and then sell it. If you're interested in remodeling and renovations, this strategy could be great for you. If you hate rehabbing properties, then definitely stay away from this strategy. So the pros of fixing and flipping is just like wholesaling, you can build a large amount of capital. Each property you can flip can be worth anywhere from $10,000 all the way to $100,000 or even more. The other pro is you don't actually have to be a rehabbing expert. You can hire that part out. Maybe you just like designing the home, and that could be great because you could find a contractor to do the work on the front end, and when it comes to the design, that could be all you. Now, there's of course cons to fixing and flipping. You can run into an unforeseen expense that completely wipes out your profit or even makes you upside down on the deal. Another con is it could be a lot of work babysitting your contractors who don't show up or who don't do the job properly. And the last con is it could take a couple of months to sell the property. Between fixing it up, getting it ready to sell, and then actually putting it on the market and closing that transaction, you're looking at least a couple of months. All right, the third strategy for active investors is buy and hold, and is my personal favorite strategy. As the strategy sounds, again, you buy and you hold the property for at least 2 years. Some people will buy and hold for 10 to 30 years, and even some people will hold for longer and pass those properties on to their children. There's a lot of pros to buy and hold investing. The first one is that you never have to worry about the market going down as long as your property is cash flowing. The property could be going up in value and then back down in value, but it doesn't matter because your tenants are paying off your mortgage and you're building equity in the property. As long as your tenants are paying more than what your mortgage costs each month, you'll be in great shape in the long term. And like I mentioned before, your tenants are actually the ones paying down the mortgage and you're the one building equity in your property. Long-term financing, like a 30-year mortgage, for example, typically comes at pretty cheap interest rates, especially nowadays. So you can lock in a super low rate now and still benefit from that 30 years down the line. And of course, there's also cons with buy and hold investing. When you hold a property for a long time, you need someone to have eyeballs on that property at all times. Whether it's you or a property manager, someone's going to need to be responsible for upkeeping the property. The other con to buy and hold investing is it's not a good strategy for building a large amount of capital like wholesaling or fix and flip is. Okay, now that we went over the 3 options for active investors, let's switch gears and talk about the options for passive investors. There's really 2 main ways to invest as a passive investor. The 2 options are whether you want to invest your money in exchange for equity in the property, or if you'd rather use your capital and lend it in the form of debt. An equity partner is where you actually own a percentage of that property. Or in most cases, technically speaking, you own a percentage of the LLC that owns that property. And remember, since you're passive, this is with you not doing any of the work, just applying the capital. There are a lot of pros to investing in exchange for equity. As a passive investor, you still get to enjoy all of the benefits of real estate: cash flow, tax advantages, appreciation, and depreciation. You could also take your capital and spread it across different operators or active investors like myself to help with diversification. The other great part is that returns are typically 10% plus cash on cash returns and can even reach 20% annualized returns. And of course, there's some cons too. Your capital could be tied up for 2 to 10 years, depending on the deal. And of course, the operator is going to have a business plan, so they'll tell you a range up front. You also have no control over any decisions with the deal. Now, that might be good for you if you want no part of it, but there might be some decisions that you want to vote on. But as a passive investor, you might not have any ability to do so. The other con to passive investing is that a lot of operators will only deal with accredited investors. These are individuals who make $250,000 or more a year or have a net worth of $1 million or more. Now, I don't make this a requirement for my investors. I know a lot of other operators don't as well, but hey, there are a few out there who do. The second option to be a passive investor is to lend your money in the form of debt. This is where you can work with somebody like me who does fix and flips and be a private lender on the deal. What this means is that you'd lend your money for a specific interest rate or rate of return. For example, let's say you have $50,000 that you want to lend to a fix and flipper in exchange for a 10% interest rate. If the fix and flip took 1 year to complete, what you get in return is $55,000. $5,000 of that is like your profit, and the other $50,000 is basically returning of your capital. If he or she only took 6 months to complete the fix and flip, then you'd basically get half of that because your 10% interest rate is on an annualized basis. I know that's a lot to soak in, so if you have any specific questions about it, feel free to leave a comment in the description below. The pros to private lending is that they're shorter term investments and you'll get your money back sooner, all while still making large 10+% returns. The cons to private lending is you're not actually building any equity in a property or really focused on principal pay down. And these deals can be seen as riskier since there's a lot of moving parts with fix and flips. Okay, I know that was filled with a ton of information, but I hope that helped you gain some clarity as to which strategy would work best for you. And if you have any specific questions about any of the strategies I talked about, go ahead and leave a comment in the description below or connect with me on social media. My links are also in the description below. And if you got value out of this video, do me a favor and smash that subscribe button. And until next time, peace.